You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 7th day of December, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side, there's a big microphone. Click that, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just don't have access to the chat box when you enter that way. When you use that first set of instructions, clicking the big microphone on the home page, what that's going to do is going to set some things in motion. Every day, just before the show starts, you'll get an email, and in that email will be a link there's your one-click access. Just click that link and you're in like fun. Okay? Alrighty. Let's open with a word of prayer. Heavenly Father, we thank you today for the beauty and the majesty that we see in your creation, which is a direct reflection of you. We thank you for the opportunity to care for the world that you have made. We ask that your blessing would rest upon this team, all of our members, all of our partners, everyone who's a part of the CFRN family. We pray, God, that you would give us great vision and enthusiasm for our work. We pray that you would bless the efforts of our hands, the bonds between us, and the influence of our work in the world. Father, as we plan and share together now, may you guide us by your Holy Spirit and lead us into all truth. In Jesus' name, amen. So, happy Monday. Hope it's a happy Monday wherever you are. Let me give you the numbers from around the world. The cash markets, the indices. Starting here, at home in the U.S., the Dow is currently down 111 points. NASDAQ is up 47. S&P 500 is down 4. And the Russell 2000 is up 3.5. Very unusual session, and it helps to explain that doji that we're going to look at on the daily chart here in a moment. In the commodity basket, crude oil down 14 cents, trading 46.12 last. Gold up $29.50, trading 18.6950 last. Silver up 57 cents, trading 24.82 last. Now for silver, that's a gain of 2.5%. Also, a $1 move in the price of silver is worth $5,000 per futures contract traded. A $1 move in the price of silver. In this session, we've seen silver move 57 cents to the upside. In the Asian markets at the close, Nikkei posted a loss of 203 points. Shanghai fell 27 points. Hang Seng dropped 329 points, which is a little over 1%. And in the European markets at the close, FTSE up 5, DAX down 27, CAC down 35. That gives us a red day in Asia, mixed day in the UK, and it's a mixed day here in the US of A. It's a 50-50 split. We got Dow and the S&P in the red, NASDAQ and the Russell in the green. Now the Russell's only green by 3.5 points, but those are the numbers. So I don't know if Michael's ready. Michael, are you ready?
I am ready.
He's ready.
I'm ready. I don't have much to go over today, though, sadly.
Right. Okay.
But I'll take it. I'll take the charts, and I'll just go through all the markets and all that stuff. All right.
Okay.
Here we go.
Locked and loaded. It's all yours.
Thank you. Okay. Now I'm not going to do a spreadsheet for today. And you know what? Tomorrow I have a surprise for everybody. Tomorrow that I got yesterday twice. But, Elizabeth got all the little girls in the neighborhood together, and they went Christmas caroling, and they came to our house twice. And I made a video of one of them, so I'll show you that tomorrow. But for now, let's just go over what actually happened in the markets. I got one tick here on gold, but I didn't get in. My internet wasn't running until 11:15. So Valerie took care of everything. But let's just take a look at what actually happened here. Now, there was no trade here. This looks like a nice long trade because we have nice bullish separation, but it was right on the trend line, so we wouldn't have taken a trade there. But this one right here, we'd have taken some profit there, some profit there. And you see right here, it's doing a cycle reset. You see how it's above the BBC? It's doing a cycle reset is what it's working on. There's along there. So in gold, there was a lot of opportunity in the first half hour today in gold. And you see right here, the cycle's all messed up and it's trying to do a cycle reset. And you see here where it's trading above the BBC and we have bearish separation down here. That's indicative of the cycle reset. Okay. So let's just keep going here. Now, I wouldn't have traded anything in here. Well, maybe, no, I wouldn't have traded that. You know, if you look at the YBR trades, there were some nice YBR trades, but just doing the stuff that we do in the room in the morning, which is what Valerie was doing this morning. You know, there were some good trades early on, but as the day went on, it just got worse and worse. You know, this was my one trade this morning. I'm not showing the spreadsheet today because, well, I only had 15 minutes. And so it's not fair to the spreadsheet. But here during the break, there was a long trade right there. Okay, it was a bounce off the BBC and a YBR trade at the same time. Those are really high probability trades. That was the only trade during the break. And that was gold this morning. Now, I actually haven't looked at all this stuff this morning because I got in so late. I had to have the internet. I had to have the internet guy come out and fix me after trusting the boys to put together everything that I bought yesterday. Anyway, right here. Yeah, I wouldn't have done anything with that. It looks like a nice long trade, but I wouldn't have done anything with it because there was a close above the MA1 with unbroken dynamic resistance right above. So there was nothing we could do with that. Okay, over here. Let me look. Give me a second. I gotta look at who's in the audience here. Okay. Over here, there was a shorting opportunity right here. And this is on the euro now. Okay, and that was right about 10 o'clock. I don't know what the news events were today. I haven't had time to look at them or even consider them. But there was a short opportunity right there. And right here was a YBR short opportunity. Then there was nothing, and it's doing a cycle reset. And really, we had only two opportunities today in the euro. Okay. Now in crude, this was, again, I didn't get in until like 11:15, something like that. And so I had a break-even trade right there. But still, I'm not doing the spreadsheet because it's not fair to the spreadsheet. Right in here, I think, is where Val made her goal for the day. Right here. When she was trading this morning. It's probably right there. Because I took over right over here. So there was one opportunity right there to get the goal for the day. And then over here, you could have taken a long right here on the sub close right here. That would have given you the goal. There was another up close right here above the trend line that ended up being a break even. And during the break, see, you can't do anything right here because you're going into the high of the day. So you don't want to trade into the high of the day when you don't have enough room to get your stop to break even. Okay. And now I'm going to get to the real mess. And I hope nobody traded this thing today. Because, I really don't have too many words for this market right here, other than just, put your mouse away. Let your sons connect to the internet and and screw up your whole internet connection and don't do anything. That's what happened to me. But there was really nothing on the ES. I mean, and this is, back before Trump. I stopped trading the ES because it was just like this all the time. It was just like this. And it was before Trump, right? And it was just a mess. I wouldn't have taken a single trade here on the ES today. No kind of YBR trade, no kind of trade at all. I wouldn't have done a thing with this. Because step one is make sure you have a trend. And nowhere in here did we have a trend. So I say this a lot, and I know you guys hear me say the same thing over and over again, but that's because I do the same thing over and over again. But knowing when to trade and when not to trade they're equally important. Equally important. I mean, anybody can put a trade on. Knowing what to do when you're in the trade, that's what we teach you to do. Knowing when to put a trade on and knowing what to do when you're in a trade. Knowing when not to trade, well, I try to teach that. And I say it, when it's happening. I say, I really don't want to trade right here. And so you're really going to listen to the words that I say. Because today on the ES, like right now, we have bearish separation. We're testing the BBC. If we go to down close on the current bar, it would give us a shorting opportunity by the rules, except step number one, knowing when to trade or having a trend. And so, today is one of those days I didn't, because my internet was down, I didn't get a chance to go and look at what the news events were. Hang on, let me go and look. Here it is. Today, G7 meetings all day. And in the US, we have this afternoon consumer credit coming up month over month. So we really don't have any news to push the markets around. And, after the first week, that is typical. Yeah, I know, Jake. You hear the words that are coming out of my mouth. No, I love Eddie Murphy. But yeah, you see right here, this would normally be a short, but I'm not going to do it because I don't think it's going to work. Why don't I think it's going to work? Because we're not in a trend. So I'm not going to risk anything on that. And, we have a long setting up right here, but it's going into the high of the day. And if it does actually set up and give a long opportunity, it would have to do it from down here in this area. Okay. And if I look at the DOM right now all my DOMs got everything on my desktop got messed up. But in Crude right now, we got the high of the day right up there at 46.46. And I think it wants to get up to 46.50, but it's got a pullback area down at 46.26. So you really want to get involved in it? I don't. And like the ES right now, let me stretch out that DOM. Hold on. See, everything got messed up. Those of you guys who were not in the room this morning, you don't know. But Valerie held the reins. and she did a good job. The ES right now looks like it wants to get down to 36.90. I don't see a strong pullback area. 94 and a quarter, maybe 94 and a quarter on the ES. Remember, this week is going to be rollover week, so we have to. Not yet, doing. I'm still going. Okay. No, I was just because I wasn't in there to do anything this morning because I didn't have any internet. I was just going, chart by chart from the beginning to now. Okay. And I'm looking at the euro right now. The euro wants to go up to 21,450. It wants to get up here, but the charts aren't giving us anything, so we can't do anything. I mean, I can tell you what I see, but if the charts don't agree with it, then that is a distinct advantage that you have of knowing when not to trade. Okay. Like right now, I'm still looking at 36.90 on the ES, but I don't think it's going to happen right away. I think we're going to be in a bunch of chop right here because the numbers keep bouncing back and forth. The euro really wants to go up. Charts don't agree with it. So, if things don't align, then just get out of line. Just let it go. There's always going to be another trade. It's just not going to be right now. Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. There you go, Dwayne. That's your key.
Alrighty. So I gather there's no recap of the recap, right?
No, not today. Not today.
Technical difficulty day.
It was. And I'm gonna kill somebody. Well, I'm not really literally gonna kill somebody, but.
So how's everybody health-wise?
Health-wise, everybody's good. Knock on wood. I'm knocking on wood. I contacted my sister yesterday to find out how everybody's doing up north, and apparently they're all doing pretty well. They're on the mend, and all the kids that we had over yesterday, everybody ate well. We had 3 teenage boys and Macy and Jada's parents, and everybody ate well.
That's great.
Jada cooked up a bunch of food, so yeah, it was good. And I don't know if you heard me earlier when I said tomorrow I'm going to give everybody a little treat if I can figure out how to do it.
Okay.
But last night, Elizabeth, who lives next to us, she rounded up a bunch of the little girls in the neighborhood, and they went Christmas caroling, and it was just adorable. So I took a video because they came to our house twice, and it's just adorable. So I will show you a video of that tomorrow. If I can. I know I have speakers somewhere in here so that you'd actually be able to hear it. But it's, yeah. I'll do that tomorrow.
Okay.
All right.
All right, guys, we're looking at the S&P 500 Emini Futures daily chart. And we had on Friday another all-time historic closing high. We had 3 of them last week. There's Friday's candle. Thursday, we had a doji. Wednesday, new all-time historic closing high. Tuesday, new all-time historic closing high. So 3 new all-time historic highs in 1 week. I don't remember the last time that happened, but here it is. So we've got a doji with a little bit of a red body. And overhead, we've got Fibonacci price extensions. Now, most folks are familiar with Fibonacci price retracements, where you take your retracement tool and you go from the low to the high, and then based on 14th century math, These are mathematically based areas on the chart where a retracement is most likely to find support and then give you another leg to the upside in this case. So Fibonacci retracement, here's the 24% of just the last leg up, okay? And that last leg began on October 30th through today. So the 24% fib of the last leg up is right in that same area as the daily BBC. BBC stands for bull bear cross. When price crosses above the green line, we're bullish, anticipating higher prices. When price crosses below it, we're bearish, anticipating lower prices. That's true for all markets. That's true for all time frames. S&P to pork bellies, 1 minute to the monthly. Okay. Below that 24, let's say this pullback, price always reverts to the mean. In our case, the mean is green. Price always reverts to the mean. If the mean, or the BBC, doesn't hold the pullback. Now the pullback holds more often than it doesn't, but if it doesn't hold, then the next area for support, based on 14th century math, would be the 38% Fibonacci retracement, which, as you can see, that 38% fib lines up with this swing high right here. So that's an area, an important price, an important area for two reasons. Number one, previous swing high, resistance becoming support, and the 38% fib. And there's a trend line that I drew previously from this high to this high. Now we've taken that out. However, on a pullback, if the BBC and the 24% fib don't hold, even if they don't hold, it should be good for a bounce. But if ultimately it doesn't hold, then we've got the 38, previous swing highs, and then this trend line, we would sit right on the top of that trend line. That doesn't hold, then there's the 50% retracement, and the 62 is of great interest because that's where we have a bullish cross. So if the 24% fails to hold and the 38 doesn't hold and the 50 doesn't hold, that puts us at the 62% fib. However, the market may not be ready to enter into that retracement. We've got a doji with a little bit of a red body using the Fibonacci price extension tool from the low to that high to the retracement low. Right there, 37.10 is that we've already passed the 24% price extension. Now these price extensions, they don't take into account politics or pandemics or Pelosi or anything. It's just math. So the 38% price extension is at 37.10, 50% is at 37.63, and the 62 is at 36.16. The market will attempt one of the two. We'll press higher or we'll enter that retracement. Price always reverts to the mean, so at some point this thing is going to retrace. It looked like this was going to be the day. We had a huge red daily candle, but as we moved into the close, buyers came in, got us back above blue and climbing. That indicator, the official name, is the CFMA1. If you're looking to go long any market, any time frame, if you're going long, you want the support of blue and climbing. If you're looking to go short, you want the support of red and falling. 1 represents support, bullishness, higher prices. Red and falling, resistance, bearishness, lower prices. Okay? So it's always a good idea to look at your daily chart once a day. It's a great place to start the day. And you don't have to look at it every 15 minutes because it's a daily chart. And once you know where you're at from a big picture perspective, then you can just drill down to the smaller time frame. All of our alerts are based off of a 30-minute chart. Anytime you see me post a chart in a workshop, in the discussion group, anywhere in Telegram, unless otherwise noted, it's always a 30-minute chart. Now, I said we have two alert services. One is called Logic 247. That's our around-the-clock Emini alert service. We open for business Sunday night at 6 p.m. Eastern. The channel remains open around the clock till Friday afternoon at 5 p.m. Eastern. We have traders around the globe, and so we got to take care of all the members around the clock. Okay, our day session is their night session, and vice versa. This was last week's highest weekly trading zone, 3705/06. We did not make it there last week, but last night, this was the opening candle on Globex last night. So we opened here, we had a gap higher open. We ran right up to the highest weekly zone from last week, 0506. We pulled back to the BBC. Price closed below it. And we have a swing low on the session down at 36.72 1/4. The high of the session came in the first 30 minutes of Globex last night, 37.05. So once price gets below that BBC, we anticipate lower prices. And once price got back above, there's blue and climbing, we anticipate higher prices. This pullback here to the BBC, remember the pullbacks hold more often than they don't. So we anticipate that this will hold until proven otherwise, which will give us an opportunity to trade back to the high of the session. If the pullback fails to hold, that will create a window of opportunity on the downside, like that. Okay. So whatever the market decides to do, based on our methodology, our strategy, and how we use our indicators, we will have an opportunity to be long or to be short. And as futures traders, we don't care whether we're long or short. All we care about is the market moving. What we don't want to see is this. So not only do our indicators help you find high probability, low risk trade setups, they keep you out of this once you understand how to use them. All of our members have access to one-on-one mentoring, unlimited one-on-one mentoring. A lifetime passport. It's $5,000, $49.97 to be exact. But it's the last time you'll have to spend any money on educational tools or indicators or anything else, because we don't do upsells. We don't make new discoveries every other week. Our method, our strategy, our indicators, nothing has changed in over 8 years. Not one line of code, not one rule, not nothing. If it's not broke, don't fix it. Our methodology and strategy is based on the underlying principle of how markets work. So there's nothing to break. There's nothing to stop working. In order for our methodology, strategy, and indicators to stop working, the market would have to stop working. Hopefully that doesn't happen. Okay? So, everything a trader needs, one low price. It's the group training, the live training room, the private mentoring, the proprietary methodology, the indicators, and the around-the-clock alerts. Now, the around-the-clock alerts look like this. Let me just show you. The other alerts are called the Concierge Trade Alerts. which is a static report. Okay, these come out as opportunity presents itself. Last week was week 122. We had a total of 50 alerts all week, round the clock. 4 never triggered. We had 46 actionable alerts, of which 2 were stopped out. That's 4% of actionable alerts. Now that's not a typical number. What we've averaged over the last 5,800 alerts over the last 122 weeks, we've averaged 20% of all Logic 247 alerts do get stopped out based on not risking more than $300 per contract per trade, less when possible, based on our simple 3-step methodology that I teach all of our traders, which is based on market structure. So last night at 6 p.m. Eastern, that began week number 123. 1, 2, 3. First trade out of the gate was along on the S&P, which hasn't triggered. Here's a gap fill on the S&P. Now, you'll notice here it says second trigger FT. What does that mean? Well, in the beginning of Logic 247, I attempted to track all the triggers because important prices, important areas are almost always tested. What that means is once triggered, one of our alerts is more likely to trigger multiple times than to only trigger once triggered. Okay, so the second time this triggered, it ran to the target. However, for the purpose of recap, we only track the first trigger. Look at almost any alert that's triggered and you'll see multiple triggers, but it's just too overwhelming to try to track all the triggers. So Valerie's just sharing here that on the second trigger it did make it to the final target. Down, no trigger yet. Russell, no trigger yet. NQ gap fill. Crude, no trigger yet. There's gold. There's a hedge on gold. Both of those triggered. In this case here, this was a buy. B is buy. S is sell. T is initial target. PR on a long, that stands for potential resistance. Potential resistance. You could look at it also as initial target, second target, third target, final trade 2 target. On every alert, the weekly trading zone overhead is the final trade 2 target on a long, and the weekly trading zone below is the final trade 2 target on all shorts. Here's silver, no entry on the first trigger. Crude oil, this was a short. This is the Dow, no trigger yet. NQ, S&P long, Russell long, gold long. This was a hedge on the S&P to be short, hedge on the Dow to be short, hedge on the NQ to be short. No, this is just a long on crude. No entry on the first trigger here for gold. No entry on silver. Now, again, the 3-step methodology that I teach our traders is based on not risking more than $300 per contract per trade, less when possible, based on market structure. So when it comes time to put on a trade and you do the 3-step methodology, the chart tells you where your stop loss needs to be. If that doesn't honor the $300 maximum risk, then you have to wait for the next trigger. Ensuing triggers typically offer more profit potential with less risk. Now, I've got a recap here. Let me pop it into Telegram, format it. Okay. Here we go. All right, so since Sunday night, last night, 6 p.m. Eastern, we've had a total of 24 alerts. It's quite a few, considering we only had 50 last week for the entire week. Still waiting on the results of 14 actionable alerts, of which one has stopped out based on the $300 risk profile. 7% of actionable alerts stopped out so far. Not a typical number. What we average on any given week, 20% do get stopped out. Now, those are the Logic 247 alerts. The criteria for those to be posted in the channel live in real time is whenever opportunity presents itself. Now, the alerts run around the clock. That means that your phone or your tablet or your PC could make that telegram sound at 2 a.m. or 2 p.m. Again, it's not when you're ready to trade, it's when opportunity presents itself. So what you have to do, if you don't want to be woken up in the middle of the night for an alert, you just turn notifications off in Telegram until you're ready to sit down and trade. Turn notifications back on. The good news is any alerts that were issued while you were sleeping may not have triggered yet, and if they have triggered yet, there's a high probability that they will trigger again. So as soon as you open Telegram, ready to go to work, you've got inventory to work with. That's all the alerts that have been posted while you slept. And then, of course, as you begin to look at your charts and look at those alerts to see if any of them are close to triggering again, you've got new alerts coming out of dripping out of the pipeline. Okay? That's Logic 247. The other alert service that I mentioned is called the Concierge Trade Alerts. Now, these differ in that instead of coming out one at a time as opportunity presents, this is a static report. It comes out shortly after the Globex Open. Purpose of this is to give you guidance and direction for the entire session. Example, S&P, E-mini. You want to be long and or only looking for long trades at 37.10 and above. At 36.81, you want to be short and or only looking for shorts at or below 36.81. There's the Dow, Russell, Crude, NQ, gold, silver. Best way to handle these are as soon as the report comes out each evening, go to your chart, draw a line. Put a line in the sand at 37.10, a line in the sand at 36.81. Everything in between is the market trying to make up its mind what it's going to do. And in between these two numbers is where you'll typically find Logic 247 alerts that take you up to the number that in many cases defines the daily sentiment. Okay, if you want to grab a screenshot, go ahead. 5, 4, 3, 2, 1. Okay, let's walk through those here on the chart. S&P 30-minute. Okay, the long side for the S&P was 37.10, which we can see never triggered. Short side was 36.81. Sell 36.81. From 36.81, we put in a swing low at 72.25. So basically that's 8 points at $50 a point. The market made $400 per contract available. $8 points. at $50 a point. $400 per contract available. Now, if you've earned the right to trade 10 contracts, then that same move is $4,000. But let me caution you, the worst thing a new trader can possibly do is to immediately start trading live or to immediately start trading a large number of contracts. All of our members receive our 24/20 blueprint. Purpose of the blueprint is to help you go from 1 contract to 20 contracts over a period of 24 months. So not a get-rich-quick scheme. You start out in the demo account in the simulator. We want to make sure that you understand the methodology and the strategy before you put real money to work. So the blueprint asks you to put together 10 consecutive days in a row where you reach your goal. Once you've accomplished that, the blueprint will give you the green light to go live with 1 contract, just 1. Now the goal is to increase your account balance, your real money account balance, by $2,000. Once you do that, the blueprint will give you the green light to add a 2nd contract. That's a very important day in your life as a trader. It's the first signal you're getting from the market that you just might be onto something, because you're adding the 2nd contract with profit you earned in the market. And when it comes time to add number 3, number 4, number 5, the blueprint will let you know. And you're always adding with profit you earned in the market. If you don't have profit available, then you don't add. We book a mentoring session. We go through the charts with you. We go through your trades with you. And we help you understand why. Okay? Help you get back on track. So again, while this was a $400 move per contract traded, for the 10 contract trader, the same moves $4,000. Now, getting out of the swing lows, tough business. Hard to do except by accident or by luck. Now, we don't have enough of an extended move here to utilize the exit signal, but if we come across a market where the exit signal comes into play, I'll be sure and point that out. For now, the market's pretty quiet. We've been just sideways since the open this morning. Okay, here's the Globex open last night. Here's this morning's open on Wall Street. Pretty lackluster. So we've been going sideways. There's the 9:30 candle, 10 a.m., 10:30, 11, 11:30, 12, 12:30. Again, we expect this to be support and give us another leg to the upside. We don't know what's going to happen next. No one does. We just are the only ones that admit it, I guess. We don't know what's going to happen next, but we know what the next high probability move is, always. Okay? So the high probability is that we get another leg to the upside. If this pullback fails to hold, that will open the door to this window of opportunity on the short side. Okay? Now that window, if buyers step back and stop buying, we could drop to that swing low. We could drop to that swing low. We could drop all the way down to the weekly trading zone below us. But conservatively, an entry here at about 36.83. Down to 36.76. About 7 points. Okay. The line's right up with this. Important prices, important areas, almost always tested. That's the story on the S&P. Let's go to the Dow. Okay. The opening candle last night. Right here. These are last week's weekly trading zones. The new weekly trading zones go out every Monday morning at 6:15 a.m. Eastern. We've been publishing the weekly zones since December 14th of 2009. What the zones do is they frame up the market for our traders so that we know, beginning Monday morning, where price is most likely to find support and resistance the entire week. Once the zones are published, they're not changed. We don't massage them, manipulate them. They are carved in stone. Now, here it is Monday. These are the zones that were put out last Monday, and they're still holding sway over the market. As the week progresses, the new zones will take hold, and then that process just repeats itself week after week after week. Last night's Concierge Trade Alert on the Dow was to be long, 3280, never triggered. And on the short side, 3080. Sell. $3,080. And from 3,080, we drop to the weekly trading zone below, zone from last week. It's a 60-point drop. At $5 a point, $300 per contract traded. Draw this all the way across. Important prices, important areas are almost always tested. So after we drop and find support at the zone, which is what we expect, when we drop to a zone, we expect support. When we rally up to a zone, we expect resistance. Resistance, support, 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 resistance. Now, price got back above the trigger, but we still have red and falling. So then price drops to 3,047, call it 3,050. That's a 30-point drop right there at $5 a point. $30 points at $5 a point, $150 per contract traded. Price then gets back above the trigger on this candle, which was the 9:30 a.m. opening candle on Wall Street. Yes, it triggered again. However, you've got a little different dynamic going on. See, on shorts, you're looking for red and falling. Here, you've got blue and climbing. Price gets back above the trigger here, and on this candle, as it triggers, you've got red and falling. So from 3,080 to the current swing low, 3,050, 30 points, $50 a point, $150 per contract traded. Now, once we take out these lows, then here's a window of opportunity right there. In fact, this will be alert number 5,816. Alert number 5,816, YMZ20. We want to sell 3,045. Target 2,025, which is a weekly trading zone from last week. So let me put that in the channel. There we go. Okay. 3,045 to 3,025. Might it go lower? It certainly might. But we know that all through here last week, this area was support, 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 and here it comes. All right, we'll pop back and look at that in a minute after it triggers. Next on the list of concierge alerts is the Russell. Okay. On the Russell. Last night's alert was to be long 1902. We haven't got there yet. $19.02. The short side, 1870. No trigger. Concierge for the Russell yet. Short side's 1870, alongside 1902. Next on the list is crude oil. These again are last week's weekly trading zones. For the zone, resistance, we get above the zone, takes us to the next zone. We get above that zone, takes us to the next zone. Resistance, consolidation, support, resistance, resistance, support, resistance. After consolidating, right up to the next zone, resistance. This pullback took us almost to the zone, and then back to resistance, and then in one 30-minute candle, we went from zone all the way to the zone overhead. As price comes back, support. We drop, support again, just above the zone, and then a number of hours of consolidation. Only three things happen at a weekly zone. Either this consolidation, which you keep seeing over and over and over, rejection, which is that, or the slice, which is that. Consolidation is the most likely thing. Second most likely is rejection. Third and least likely is the slice. Now, what typically happens on a slice is we slice through a zone like it's not there. When the move runs out of steam, price will retrace back to the zone it sliced through, and typically will then continue in the direction of the slice. In this case, that did not happen. Okay, last night's concierge alert for crude was to be long at or above 46.75. Now on all these that haven't triggered, if you go and look at the Logic 247 alerts, you'll find the ones that did trigger. Okay. The short side, 45.50. $5.50. $45.50, swing low. It's $190 per contract traded. That's what the market made available. And back to the Dow. Remember the alert we just put out? 3,045 down to last week's zone at 3,025. That's a 20-point move, $5 a point. It's $100 per contract traded. If you're a 10 contract trader, that's a $1,000 candle right there. Let me say it again. Whatever you do, don't go live right away, and certainly don't try trading multiple contracts till you first prove to yourself. You don't have to prove anything to anybody else. Just prove to yourself this time's different. Time's different. After the blueprint gives you the green light, after you've put together 10 consecutive days in a row. Now, I know this time you really do want it to be different. You really don't want to blow up another account, but if you don't change something, that's exactly what's going to happen. I know you just want to click the mouse and make money. We all do. But you're going to have to learn to exercise patience and discipline if you want to become a consistently profitable trader. Being a trader doesn't mean you've always got a hook in the water. Being a trader means that you recognize high probability and low risk, as we just demonstrated right here. Okay? All right. Next on the list is the NQ. NQ pulling back to the BBC. Now some might say, oh, well, if it's going back to the BBC, then just short that thing from 65 down to 55. Okay, you could do that. That's a counter trend trade. All of the alerts, Logic and Concierge, are trend-based trades as defined on a 30-minute chart. So, while trading counter trend is something many folks do, some folks specialize in that because they're contrarian thinkers. Okay, if you want to trade that, it's a legitimate opportunity. The reason I don't put counter trend trades in the alert channel is because, in my experience, they don't have the same degree of high probability as a trend trade. And because I'm working with brand new people who are trying to be consistently profitable, in many cases for the first time in their life, I only want to give you the very best that I have to offer. And so if I know, based on personal experience, that trend trades have a higher probability of reaching their target than counter trend trades, why would I ever give you a counter trend trade? And you're sitting there going, yeah, but it's doing the thing. It is. It is doing the thing. Now, just because it's doing the thing doesn't mean it's going to get all the way to the BBC. And you might say, well, yeah, but your trend trades, they don't always get to the final target. That's true. So I'm pointing it out, making you aware, and you'll determine what you want to do. Everything that Michael teaches you in the morning in the live training room, that's based on trend as defined on a range chart, a 4-tick range chart. Now, a range chart is simply a chart where every candle is exactly the same size. So in the morning in the training room, the chart you see Michael using, every candle is 4 ticks tall. 4 ticks in the S&P is 1 point. Okay? Every candle is the exact same size. Now when you go into time-based charts, that's not true. On the range chart, what causes you to get a new candle is price movement. If every candle's 4 ticks tall, then on the 5th tick, guess what? New candle, right? Okay. On a time-based chart, no matter what happens to price, every 30 minutes, like clockwork, you're going to get a new candle. Same is true of a 1 minute, a 5 minute, a daily, a weekly, etc. Okay. So, this trade that I didn't put in the alert channel, from 65 to 55, is now underway. If we go from 1265 to 1255, that's 10 points. The NQ pays $20 per point. So that little window of opportunity, if we touch down on the BVC, $200 per contract traded. Okay. Now, once price hits the BVC, we expect it to hold. We expect it to be good support. Then we'll have an opportunity to trade back to the high of the session. If the pull back to the BBC, if it fails to hold, in other words, we close on the other side below the BBC, that will give us a window of opportunity right here. This bullish cross, we expect that to be good support. So we want to close below the BBC, get short around, well, it's going to be based on what the closing candle looks like below there, but potentially an area of like 12,540 down to 12,525. That bullish cross right there represents good support. On the daily, on the 3 minute, the 5 minute, the 1 minute, you name it, a bullish cross that leads to a substantial move will most likely be good support on the return trip. Bearish cross, same thing in reverse. Okay, last night's Concierge Trade Alert for the NQ was to be long 12,597, which is where we sit right here, right now, or where we were, 12,597, and the swing high was 612. So that's about $300 per contract traded. That's what the market made available. Short side for the NQ, 12,481. And the swing low, 74.75. That's $120 per contract trade. Okay. So both of these I qualify them as non-starters. I mean, they hit the concierge. Now, this shows you when I say important prices, important areas. Okay, look what happened. We get to the important price, important area, and we reverse. Here, we come down, we get to the important price, important area, and what do? Reverse. Okay. Next on the list is gold. Gold. Okay. Last night's alert was to be long 1855. $18.55. Now up to last week's zone at 63. That's $800 per contract traded, right there. However, we did keep going, and we put in a swing high at 73. So it's $2,200 per contract traded is what the market made available. Now earlier I mentioned the exit signal. On an extended move like this little black line, that's called the step line. Steps up, steps over, steps up, steps over, steps up, steps over. At some point, when a move runs out of steam, price will start to walk sideways. We can see that we have a series of green candles here. But something's changed. Price is walking sideways instead of walking up. The step line on a long will initially start out, in most cases, on the left side of blue and climbing. Once the step line crosses over to the right side of blue and climbing, what you're looking for is the first, on a long, the first red candle that closes below the step line. In other words, this candle that we're looking at right now, if it closes below the step line, that is the official exit signal. Now you might say, wow, I've already given some back. Do I have to give back more? No, of course not. It's your business. You're in control. You can decide whether you just take an exit here or wait for the exit signal. Now some might say, well, why would I wait? Well, because buyers could come in, could take this thing up to the next area of potential resistance, and they may not. Right now, the low of this candle is, we'll call it 1868. 58 to 68, so 13. Yeah, I might have miscalculated this one. What was it? 73 minus 55. I did it in my head. That was $1,800 per contract traded. Not sure what I said. That was $1,800 is what the market made available. And now we're down to $1,500. So if you want to take profit here, you certainly can. The short side for gold last night on the Concierge was to be short 1835. Sell. From 1835 we dropped to 1825. It's 10 points at $100 a point. That's that 30-minute candle, which was 30 minutes into the London Open. $1,000 per contract traded. Right there. If you've earned the right to trade 10 contracts, market made 10 grand available. One more time, don't go live right away. Don't trade more contracts than you've earned the right to trade as outlined in the 2420 blueprint. Oh, thanks, Ray. I just saw what you posted. Ray had posted that the Dow made it. So, question is, all right, now what? Well, we know this area here is potentially good support. I mean, it was back on Friday. It was after the London Open. If we come out the other side here, which it looks like we're doing, if we look left, we got potential support there, there, there. Now down here is a good window, but what can we do up here? Is there anything at all? 29985, nope. $29950. Nope. 29930 to 10. 29930. To 29910. To 29860. So that window of opportunity, it's right here. We're going to get below that low, and then there's 20 points between that low and that low. And then if we take out that low, then there's another 50 points on the way down to that zone. That's if it breaks down. See how we pop back up? This whole area right here is good support. So we have to anticipate that it's going to be good support again until proven otherwise. We're looking for that window of opportunity where we have no obvious obstacle in our path. Okay. Next on the list is silver. Last night's concierge alert for silver was to be long 2468. For 68 to 94. 26 cents. That's $1,300 per contract move. Right there. The short side on silver is $24. It's right there. And from 24 we dropped to 23.70. That's 30 cents. That's $1,500 per contract traded. Let me show you something if I haven't showed it to you before, which I probably have. But at investing.com, go to Tools, go to Profit Calculator. It defaults to Forex, switch it to Futures. Type in silver. Okay. ZI. Silver futures. So if you go long one contract at $23 and it goes to $24, $5,000 per contract. It's 1,000 ticks. Okay. So in this example, long at 24.68, and the swing high 24.94. $1,300 per contract traded. For 10 contract traders, 13 grand. Just don't put the horse before the cart. No, don't put the cart before the horse. There you go. It's awkward for all of us. Okay. If you did not grab a screenshot and you'd like to, feel free. These numbers are valid until the new concierge alerts come out tonight, shortly after the Globex Open. If you're on the trial, you have access to the logic alerts, the concierge alerts, the indicators, the weekly trading zones, everything we have, you have full access to when you're on a trial. We treat you just like a member. For a whole week, no credit card required. At the end of the week, after you've had a chance to use our platform, use our indicators, put on and take off trades, attend class, have a mentoring session, once you've been fully immersed in the CFRN experience, then you get to make a well-informed, intelligent decision whether or not what we do is right for you. If you think it would help you to have a clearly defined, structured method for entering and exiting the market, if you think it would be beneficial to have someone actually point out to you individual trade setups, just like the one I just pointed out, live in real time. That's how it works. Around what you saw us do here with the Dow. That's exactly how every one of these unfolds. Live in real time before it happens. In most cases, you have 20-30 minutes to get to your computer, to get your thinking cap on, get your trading cap on, before it actually triggers. Okay? That one we just did on the fly because it was staring right at us. Okay? All right. If you have any questions about how to become a member, now look at Crude. Crude ran into last week's zone resistance. Very important that you put this week's zones on your chart, but hang on to last week's zones for this very reason. So it's the high probability trade here. Where's the window of opportunity? Yeah, that's a tough one. Okay. Price will most likely pull back to the BBC, find good support. So that would be a counter trend trade. So we're going to pass. Price comes down, finds support, makes another run to the upside. Over and over and over. Now, if you want to learn more stuff, you want to get into some complicated things, you want to use a ton of indicators and oscillators and magic and voodoo, we're not your cup of tea. Don't even waste your time. If you want something that's simple, something that can be duplicated day after day after day after day, something that will also tell you when to stay the heck out of the market, okay, and then show you where high probability, low risk lives, we are your cup of tea. Time now for our good word for the day. Friday we talked about making your words count. Today we'll talk about laughter, God's prescription for stress. Proverbs 17:22. A happy heart is good medicine, and a cheerful mind works healing. You may have heard there's a fellow, Norman Cousins, had cancer. I think this was back in the days of videotape, VHS. He got all these episodes of like the Three Stooges and every kind of comedy he could find. And as the story goes, he laughed himself out of cancer. Okay. Now that's a story probably everybody's heard. What's the truth? I don't know. But we all know that if we have a good belly laugh, we typically feel better, right? Author Barbara Johnson said, laughter is like changing a baby's diaper. It doesn't permanently solve the problem, but it makes things more acceptable for a while. How many times have you found yourself immersed in some situation, something happens, and you're just so stressed out, you're freaking out, you say and do things you wish you hadn't. And then a day later, sometimes an hour later, you reflect back on yourself and how you were literally beside yourself, and you laugh at yourself. And you remind yourself, boy, I'm going to remember this the next time I'm in the heat of battle. A lot of it has to do with perception. Whatever your problem is today, remind yourself how insignificant it is in the grand scheme of life, the world, human existence, eternity, God's kingdom. It works sometimes. One day, comedian David Brenner was signing books. A young man handed him a newly purchased copy to be signed and said, "I want to thank you for saving my life." Without giving it much thought, Brenner replied flippantly, "That's okay." But the young man stood his ground and said, "No, I really mean it." Brenner stopped signing and looked at him. The young man continued, "My father died. He was my best friend. I loved him, and I couldn't stop crying for weeks, so I decided to take my own life. The night I was going to do it, I happened to have the television on, and you were hosting The Tonight Show. I listened to your opening monologue, and the next thing I knew, I was laughing hysterically. I realized then that if I was able to laugh, I was able to live. So I want to thank you for saving my life." Humbled and grateful, Brenner shook his hand and said, "No, I thank you." The Bible says, a happy heart is good medicine, and a cheerful mind works healing. Experts confirm that laughter boosts your immune system, enhances your memory and learning abilities, relieves tension, slows your pulse rate and blood pressure, releases endorphins, that reduce pain, decreases anxiety and stress, puts people at ease, and brings unity. Furthermore, the effects last for 8 to 12 hours. It promotes emotional healing, and best of all, it's fun. That's why laughter is God's prescription for whatever's stressing you out. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.